So I'm Amy Hanauer. I'm the Executive Director of the Institute on Taxation and Economic Policy. And I started this job just a little over a year ago. And I have to say that it is an incredibly fun time to be starting a job like this, because the work that Matt Gardner, who I'll introduce momentarily, and the rest of our team has been doing, some of them for many, many years, is finally sort of paying off and really leading to viable policy possibilities and to an incredible amount of attention. So it's like not every week that you're cited hundreds of times in every important newspaper and by the president himself. And but much more importantly, it's not every week that you think that progressive policy opportunities could really happen. So as Stephanie mentioned, we have a great panel today, starting with me and my colleague, Matt Gardner, and then followed up by a longer discussion with Arlene, Martinez, Stacy Mitchell, and Dania, Rajendra, and I'll introduce them in a little bit. I want to start by introducing my colleague, Matt Gardner. So Matt is a senior fellow at the Institute on Taxation and Economic Policy. And for more than 20 years, he's been putting this organization on the map. I worked with him when I was in my old job, and I just always knew that if I had any question about corporate taxes or about sort of economic distribution and inequality and how it related to the tax code, Matt was always a go-to person for me and for many other people all around the country. He knows as much about corporate taxes as anyone in the country. And he was the author of the major report that we put out this week that's been getting so much attention. So just like before I start asking Matt the hard questions, I just want to queue up really quickly, like, we think corporate tax avoidance is a huge problem, and we know that it contributes to and is fed by other aspects of corporate abuse of power, abuse of workers, abuse of the environment, over concentration of power. And that's some of what we'll get into in the second panel. And as Stephanie said, like everything that we want, economic justice, healthy communities, racial justice, and climate justice, it really all depends on tax justice. And so Matt is really one of the experts who can tell us how we get to a more equitable and just tax code. And I want to just also say that I think there is a really strong appetite to fix this right now. And that is, yes, it's because we have some good people who we've elected to office, but it's also because many of the kinds of people who are listening in on this call, journalists and activists and advocates and researchers, and like the next generation of young people has been pushing and pushing to finally say, like, we actually need an economy that works for all of us. And so keep up the pressure. Like, I just think all of you out there are why we see some opportunity at this moment. So I guess I want to just jump to Matt first, and he'll maybe tell you if any of my optimism is unwarranted. But I guess I just wanted to say, Matt, like, what did you find in this? What's the name of the report you just put out, and what did it find?
So the report is, thanks very much, Amy, for the kind words, by the way. The report came out last week, talks about the scale of federal tax avoidance last year during the pandemic. Nutshell description is we found out there's a whole lot of it going on right now. We looked at the biggest corporations in America, companies that are either in the Fortune 500 or the S&P 500, and found that 55 of them found ways to pay zero federal income tax in 2020, despite enjoying substantial profits last year. As a group, these companies reported $40 billion of pre-tax income in the US last year. And that's $40 billion that should have been subject to federal income tax at a 21% rate. You can do the math. That means they should have paid $8.5 billion in federal income taxes, but they didn't. They didn't pay a dime of that. And instead, they got net rebates to the tune of $3.5 billion. Put another way, these 55 companies got a total of $12 billion in federal income tax breaks. Doesn't mean we wrote them a big cartoon check for it, but it does mean that during a pandemic year, as a nation, we prioritized, whether we wanted to or not, giving these 55 companies $12 billion.
Wow. So you keep saying 55 companies. So like, who are they? Like anyone we've ever heard of? Any companies we've heard of?
Well, in dollar terms, probably the worst offender, the biggest on the list would be Nike, which made $3 billion last year and paid nothing in tax on that. FedEx, the company that, like many delivery companies, did really well during the pandemic, made $1.2 billion and paid nothing on that. Archer Daniels Midland, HP, which makes computers, Salesforce, there's a bunch of utilities on the list. All of these companies found a way not only to stay afloat during the pandemic, but to thrive, and all of them paid zero or less. But, and I think this is a really important point, some of the worst offenders right now in terms of corporate tax avoidance aren't on this list at all. Amazon, which I hope we'll talk about a lot today, and a company that we've identified as a chronic tax dodger at all levels. Amazon made $20 billion all by itself on that last year. They're not on this list because they didn't pay zero. They paid a 9% tax rate. And even at that 9% rate, Amazon's federal income tax savings last year, what we as US taxpayers gave Amazon last year, was $2.3 billion. And that's way more in dollar terms than any company on this list of 55. And, you know, it's not just Amazon. You probably know that we've pointed out Netflix's tax avoidance in the past. They made $2.7 billion last year, and that's more than all but one of the 55 companies on our list. Again, we're not talking about them in this report because instead of paying zero, they paid a 1% tax rate. General Motors, 1%. Walt Disney, 2%. Abbott Labs, Xerox, Intel, Caterpillar, all these companies paid in the single digits last year. So, you know, in dollar terms, in terms of how do we get out of this, it's not these 55 companies, it's the much broader universe of companies that appear to be quietly, routinely paying way less than half the 21% tax rate they should be.
Yeah. So is it like you say they should be? So are they breaking the law? Like, how are they getting away with this?
Yeah, this is a really important point, and I think one that you have to talk about anytime you talk about this. On its face, there is nothing these companies appear to be doing that is illegal. It's pretty clear, to the extent it can be made clear from the financial disclosures we're looking at here, that these companies are relying on a straightforward set of federal policies. Accelerated depreciation, which is supposed to encourage capital investment, research and development credits, which encourage research in theory, tax breaks that allow companies to write off stock options as if they were cash, tax breaks for renewable energy, tax breaks for fossil fuel energy. We've got them all. All of these things appear to be what these companies are using, and there's no implication whatsoever that in their domestic tax avoidance, they're breaking the law. But I don't want to just leave it there because I think that's only half the observation. Amazon, interestingly, as you may know, in responding to Elizabeth Warren's criticisms of their tax avoidance, actually said in a tweet to Senator Warren, we just follow the rules. And of course, we know that's not the case. These tax breaks are in many cases legal precisely because the business lobbies of which these 55 companies are part have been on a full court press for the last couple of decades to get the tax rates down and to broaden these tax breaks. So yeah, these tax breaks are legal, but they're legal almost entirely because these corporations have been so intent on making them legal.
Yeah, yeah. So I've been following ITEP long enough before I was here to know that you never have loved the way corporate taxes were, or you haven't for quite some time. So is this different? Like, is what you're seeing in the last year or two different from what we saw, say, when Obama was president or whatever?
Yeah, it's an important question as well. Short answer, it's pretty similar to what we've seen in the past decade. It's been far worse, for sure. Certainly when Bob McIntyre and Citizens for Tax Justice were setting the standard for this sort of research with their groundbreaking work in the 1980s, they were finding companies sheltering maybe 3/4 of their income in tax. The tax rate used to be 46%, and they found companies paying an average of 14%. The 1986 Tax Reform Act went a long way towards ending that dramatic level of tax avoidance. And for the past 20 years, I think it's fair to say that we've been sort of bumping along with companies, whatever the tax rate was, companies are paying maybe half that. So until 2017, when the tax rate went from, it used to be 35% and companies were paying a little more than half of that. Now the tax rate went down from 35 to 21 since 2018. And what we're seeing preliminarily is that companies are on average still paying maybe half of that. So the scale, I think, is unchanged. What's disturbing about that is that we were supposed to have fixed this already. If you remember the rhetoric from 3 years ago with the 2017 tax cuts, two things were supposed to happen at the same time. One, we were going to cut the corporate tax rate, which then President Trump prioritized. The other was we were going to see this base broadening where we increase the fairness, get to a place where we weren't seeing companies paying zero anymore, ending tax avoidance or scaling it back. And as we know, that's not what Congress and President Trump did. They dropped the rate from 35 to 21, but really did very little to end tax avoidance. So, it sounds like a glass half full thing to say that we are where we have been, but we missed an incredibly important opportunity to pare down tax avoidance in 2017. And now we find ourselves in a position where we have to do all the hard work of broadening the base without having the luxury of dropping the rate.
Yeah. So what do you think should be done? What can we do about this? Anything?
That's the nice thing about inaction is that there's always lots of actions available, and the utter failure of past Congresses and past presidents to remedy this problem means that there are a lot of opportunities for change right now. Observation number one is that cutting the corporate tax rate from 35 to 21% was viewed pretty universally by most impartial analysts as reckless at the time when it got done in 2017. Undoing at least part of that rate cut is job one. Job two is getting to a point where we don't have this phenomenon of zero tax corporations anymore. Obviously, if your taxable income is zero, you don't care what the tax rate is, which is maybe why Jeff Bezos says he's okay with hiking the tax rate. We got to get to a point where what companies report to their shareholders on their financial statements as far as their income isn't way bigger than what they're telling the tax people. And so we need to get to a point where we're taxing businesses' income, big businesses' income, universally, without loopholes, without giveaways. And that means taking a serious look at all the tax breaks that are on the books, all the ones I mentioned a little while ago that companies are taking advantage of, asking if they're effective, repealing them if they're ineffective, reforming them if they have some usefulness. That's the hard work that hasn't yet gotten done. So some combination, domestically, some combination of increasing the rate and broadening the base is really what we need to get to a place where the corporate income tax is sustainable and fair.
Okay, awesome. So there's been a lot of attention that Biden is doing something. I mean, what are his plans, and how does that relate to what you might recommend?
There's really a pretty substantial overlap between what the president has outlined so far and the broad agenda we'd like to see. I mentioned both the base and the rate are definitely part of this, right? Well, he's proposed to hike the rate back up to 28%, basically taking back half of the cut that got done in 2017. We went from 35 to 21, now he wants to go back up to 28. He also, importantly, wants to take some steps to broaden the base. He signaled that he wants to end some fossil fuel subsidies through the tax code. I think that's important. He also wants to create what's called a minimum tax, which would be based on financial statement income. The details are still a little hazy, but basically the idea is just what I said. You shouldn't have two sets of books. One where you tell your shareholders you're really profitable, and one where you tell taxpayers the tax authorities you didn't make anything. What Biden has proposed is to say that big number that you tell on shareholders, we're going to have a backstop tax based on that, 15% of book income. And that is geared directly towards ending the tax avoidance we're documenting in our 55 companies report. Many of these companies would be forced to pay something more than nothing if this sort of thing were in place. It's not the same thing, to be clear, as going through root and branch and repealing all the tax breaks that don't work. A minimum tax has the effect of reducing the aggregate cost of these things. No matter how many tax breaks you claim, the collective effect can't be to get you down to zero. So we think that's a fantastic idea. There's an international dimension to Biden's plans as well that is pretty revolutionary, I think, and worth talking about. We have now a territorial tax system, essentially, where, to oversimplify a little bit, we're pretty much giving up on the prospect of fairly taxing the foreign income, the offshore income of US-based corporations. They can send, as they could under the old system, they can send profits into offshore tax havens and know that they will pay a substantially lower tax rate than if they kept that income where it belongs in the United States. The president has proposed a global minimum tax, which would ensure that companies that are currently playing games with their profits, shifting them out of the US or out of other countries into the Cayman Islands, Bermuda, countries that have no real tax system, these companies will end up paying a 21% tax rate on that income, no matter where they hide it. That is a tremendously important step because it will, if implemented, pretty much take away the incentive for companies to play games with their offshore profits. And we know this has been a pervasive problem going back decades. It is the problem in terms of the worldwide sustainability of the entire project of taxing corporate profits. You have to do it. So I think that's a real headline thing. Lastly, Biden has also proposed, and this is pretty vital, beefing up enforcement, giving the IRS for the first time in over a decade the tools it needs to effectively enforce the tax laws. That is huge.
Yeah, that's awesome. Okay, so can you just tell me a little bit about like what Janet Yellen has been talking about and how that differs from Biden, from what you just said about Biden's minimum tax?
Yes, Janet Yellen's it's been fantastic to hear. She's been discussing this idea of a global minimum tax, which inherently involves, I think, and she stressed this in her comments, involves cooperation between the US and members of the OECD. And I think it's an important recognition that no one can go it alone. We can't unilaterally impose tax rules. And if other countries aren't doing something similar, that could make it harder for us to effectively enforce the tax laws. The good news is that what Janet Yellen has been saying is actually pretty much in agreement with the direction that the OECD itself has been going. The leaders of most European nations are now really realizing that this race to the bottom in corporate income taxes, where we let companies have a 0%, let countries have a 0% tax rate and give companies an opportunity to shift their income into those tax havens, that can't last. It's utterly incompatible with having a viable corporate income tax. So what Secretary Yellen sensibly has been saying is that we need to work as part of a unified international framework to make sure that companies can't game the system by shifting profits out of the US or Germany or France or any of the nations that are currently trying to tax profits into these tax havens. It's a really important point.
Great. Okay, thanks. So my last question for you, like since I've started this job, I feel like I come in super optimistic and you and some of the other people who've been working on these issues for a long time kind of laugh at me. So, how justified is my optimism right now that we might actually get something done?
Well, we got a long way to go. I mean, obviously, Democrats have majority in both houses of Congress now in the presidency. It's possible that a majority, including Joe Manchin, isn't a majority worth bragging about, but we have that. Democrats have that. And I think that's something. But to me, there's a couple of points that I think are really worth thinking about as good things. One is that agenda setting power is vital. Forget about the details for a moment and just look at the broad sweep of what Joe Biden proposed last week and has signaled he'll do on the individual side in weeks to come. He's sending this clear signal that we need more revenue, that we need more fairness, and that there's a way to get there, that we need a corporate income tax. And that message is incredibly powerful to hear from those in charge. We haven't heard that kind of broad, constructive message about how to think about taxes in a couple of decades, certainly not in the last few years. So that's a reason for optimism. Second reason I think to be optimistic is that at a time when the American public can't agree about anything, there's an awful lot of support among the public for corporate income tax increases. The American public understands that big companies and the best off aren't paying their share, and critically, they understand, I think, that if these companies don't pay their fair share, in the end, it's going to come back to the rest of us. So, and I think you can see that even in the, President Trump didn't mean it, but he did say that he wanted to end corporate giveaways when he was running, and again when he took office. And he did that because he recognized that a lot of his base recognizes that that basic unfairness, that when you give big companies tax breaks, you're taking them away from small businesses. So that combination of things, overwhelming public support, agenda settings to power, certainly the fact that we're seeing international agreement, that the OECD is coming to exactly the same position we're coming to now. We need to be unified in preventing tax avoidance. Those are all reasons to be optimistic, not necessarily about the prospects for action in the next month or the next 6 months, but the direction we're heading in. I think this is cause for optimism.
Excellent. All right. Huge thanks. I know that we're going to shift now to the panel, and Matt's going to disappear momentarily, but don't worry, he's going to be back for part of the Q&A at the end, because I would rather he answer questions than that I do. So I wanted to just say, like, next, that we have pulled together 3 really brilliant leaders who do have smart things to say about taxes. Yes, but they also look at other aspects of corporate accountability beyond just payment of federal corporate income taxes. And so I think that they really help us connect the dots as to why we should care about this, and how fair taxes kind of relate to the rest of the things that we as people need from the companies that make their money off of us. So I wanted to start with Arlene Martinez. Arlene is the communications director at Good Jobs First, and I've followed Good Jobs First for many, many years now. It's an organization started by Greg Leroy that has a history of really looking closely. When Matt said race to the bottom, that's a phrase that I feel like I know about from Good Jobs First. And they look closely at how we race to the bottom between states and localities to compete on the basis of low taxes rather on the basis of high wages or a well-trained workforce or great infrastructure. So Arlene herself has a history of watchdogging local governments in newspapers in Pennsylvania, California, and DC, sometimes targeted toward the Latino community and sometimes much more broadly, like working at the LA Times. So she left journalism to join Good Jobs First, I think kind of continuing this tradition of pushing for a just and equitable world through good research. So thank you so much for joining us, Arlene. And so I'm going to start with the first question to you. So your organization, Good Jobs First, kind of looks at how corporations pit state and local government against each other to reduce what they do for their communities. So how does this happen, and why is it a problem? And what do you have to say about that?
Yeah, so corporations get a lot of help from state and local governments. So we estimate about $70 billion a year that local and state governments are giving to corporations in the name of economic development. And there's a large body of research that really shows that these economic developments the incentives don't create good jobs. And what they do is they take money from public services like schools and public safety and infrastructure, and you name it, they're contributing less to it. So Good Jobs First is really pushed to sort of shed light on why these incentives aren't effective, and also to get transparency around them, because it's really difficult to find out in a lot of cases what companies are actually getting. But they get all kinds of property tax breaks. They pay taxes to the boss, which means instead of going to the state, they're taking their employees' income taxes directly. Their sales tax exemptions. So there's this whole sort of menu of extra bonuses that corporations get on top of these federal tax breaks that you're talking about. So it's really.
Yeah, great. Thank you. Thank you so much, Arlene. So I'm going to kind of go around to our 3 panelists and then kind of circle back to Arlene again. But I wanted to introduce Stacy Mitchell, who's co-director of the Institute for Local Self-Reliance, which is a national research and advocacy organization that fights corporate control and works to build thriving, equitable communities. And at ILSR, Stacy runs the Independent Business Initiative, where she's just done a huge amount of research and reporting on the importance of small businesses and the public policies driving their decline. And I just have to say, like, I had a rare treat this weekend when I was kind of prepping for this panel in getting to just see the way that Stacy makes connections between corporate concentration of power and how it really hurts us all, and why it's like not what we kind of signed up for. So Stacy, how do you think this all relates to tax policy? Like, how does tax policy contribute to monopolization, and like what can we do about that?
Well, thank you so much. And it's really great to be part of this conversation. I'm such a huge fan of ITEP, and I use your research all the time and puts sort of hard data to some of the arguments we're making, and is just incredibly useful. Yeah, I mean, tax policy is a really powerful tool for like structuring markets, for deciding which companies win and which companies lose. And we use tax policy to tip the scales in favor of some companies over others. And of course, powerful corporations also use their political power to game the system and to write the rules to get those advantages. So, you know, taking advantage of tax policy loopholes, manipulating tax policy is a core strategy of monopolistic corporations. You know, probably the best example of this one, you know, is one that Matt touched on, which is Amazon. You know, Jeff Bezos, when he founded Amazon in 1995, instead of locating Amazon in the Bay Area, where all of the sort of tech talent was, the logical choice, even by his own admission at the time, was to put it there. He instead located Amazon in Seattle because it was a way of avoiding having to collect sales tax in a populous state like California. And Amazon maintained that sales tax exemption for basically 2 decades. Extraordinary. I mean, when you're an independent retailer and you're having to add 7, 8, 9, 10% onto a sale, especially if someone's buying a higher value item, that's a big deal. And there's a lot of data that shows that what happened is that people shifted to Amazon to take advantage of that ultimate difference in cost. And Amazon very much understood this. You know, we think of Amazon as, you know, we sort of tell this mythical story about, oh, you know, this genius inventor had a great idea. But the real story of Amazon's history has a lot to do with gaming public policy. And of course, after Amazon, you know, in addition to the sales tax exemption, it has gotten tax breaks. And as, you know, Good Jobs First has shown, I think nearly $4 billion in tax breaks at the local level to help fund its expansion of warehouses, its new headquarters. It's gamed the federal system, you know, as you noted, has not paid much in the way of federal taxes. I mean, the independent bookstore down the street from me, the local grocer here, our small businesses are paying an average effective tax rate of around 20%. So, you know, this is how firms monopolize markets. And I think the last thing I'll just say to the last part of your question is like, how we can change this? I do think that this points to a framework that maybe can be helpful as we try to drive change on this issue, which is that this is a profound unfairness to smaller companies and smaller businesses. And I think small business has been left out of the conversation around this and could be a much more central figure in helping to drive change.
Yeah. Yeah, you had a great article in The Nation that talked a little bit about that. Yeah, well, thank you for all of that. And I guess I want to just bring our third voice into this conversation, and that's Dania Rajendra, who directs the coalition Athena, which is actually dedicated to creating a better democracy and a better economy, particularly by taking on Amazon, which Athena sees as an impediment to both. And one of the things I really like about the way Dania approaches this work is she puts racial justice and economic justice kind of at the center of the way that she re-envisions our economy. And I think just has a very sharp analysis that is really helpful to the conversation. So, you know, Stacy said some of this, but it was sort of still what I was going to throw out as my first question to you, and I think I'll stick with it, which is, look, like lots of companies do bad things, and I don't want this to only be a panel about Amazon, but there is one major, you know, I mean, Amazon really does take it to the next level. So can you just say a little bit in particular about, you know, why Athena was started or why you think that Amazon deserves particular attention?
Sure. Absolutely. Amazon has plenty of peers in being nefarious. Um, so first of all the smarts we have are collected amongst our members, and especially our founding members in both Good Jobs First and Institute for Local Self-Reliance are both members, and we're very proud to have built this kind of intentionally sprawling coalition. So Amy, to your question, in many ways, Amazon is all the things, right? Yes, they're the everything store. They're also, in this moment where we're having a big national conversation about what is infrastructure, they are the infrastructure of the internet. The roads, bridges, etc., metaphorically speaking of e-commerce. And they're the second largest employer in the private sector employer in the United States. All of those things mean they have many ways to aggregate their enormous power. Also, they're headed by the richest human on the planet. Also that, right? So like there's a ton about the way in which they throw around that power and the way in which those different kinds of power reinforce each other. And so I think a helpful starting point for us at Athena is, what kind of community do we want to live in? And then what are the policies that support having that kind of community? And I think, especially in this incredibly difficult last 12 months, where COVID has laid bare so much about the structure of our society and the way in which economic policy reinforces and hems in our ability to care for ourselves and care for one another, and very much in particular, Indigenous, Black, and Latinx folks' ability to keep one another safe, for us to keep them safe, has been so fully on display. And that's not unrelated to the 20, what are we up to here, 6 years of tax avoidance about Amazon. Amazon's of course not the only corporation that is advancing racial capitalism. There's a whole list, but the way in which this corporation uses its power, the number of different kinds of businesses it's in, and its employment footprint, and the ways it shows up so much in our communities and gorges itself on public dollars, from local and already disinvested communities all the way to the very top of the federal government, is both reprehensible and illuminating. And I think that that's part of why, it's an exciting day where like everyone's on tenterhooks to find out if we have news from Alabama today. But I do think that that's why, a community, an African-American community in the South, in Alabama, taking on this behemoth has galvanized so much attention, because it really makes clear the stakes for us as a democracy. Like, are we going to live in a place where those folks get to have a free and fair election, or are we going to continue to live in a society which, as Matt said, like is making intentional policy choices to have rich folks get richer?
Yeah, great answer. And I'm sure most people on this call know what Dania is referring to, but there was a union drive at a Amazon plant in Bessemer, Alabama, that is going on right now, and the votes were ended last week, but somehow it's still, I don't know, it takes a long time to count the votes in our states around our presidential election, and apparently it also takes a long time to count the votes at this facility. So well, I'm going to shift back to Arlene for a second, because we've kind of homed in on Amazon, and we're talking a little bit now about workers' rights, but I think that this has implications that go beyond how working people are doing, and that get to like sort of the health of our communities. And I know that Good Jobs First has a new report that tracks environmental violations by corporations, and like how states can enforce that law or don't enforce that law. Can you just say a little bit about that report? And I think you might have already put it in the chat, but if not, I'm sure you can do it after you finish talking, or someone else will do so.
Yeah, so we looked at some of the state level environmental enforcement actions that states have taken against corporations, and we saw a lot of disparities between states. And it kind of just goes back to this point that corporations operate so much in impunity, where they just don't face consequences for their action. I saw a question there in the chat that sort of raised this very point, that corporations they sort of operate how they want, they treat the environment how they want. State and the EPA should be working together, but they're not in many cases that we could find, or the fines are so small that they're just such a minimal cost of doing business for these corporations that it really doesn't change the way that they act. And those have been added to our violation tracker, which now has half a million records that total $667 billion worth of penalties. And what it really is we call violation tracker. Phil Matera does, the creator of it. It's the story of corporate recidivism, right? Because you see corporations there over and over just treating workers wrong, misusing the planet, and name it the violation that's happening, the deaths on the workplace, and so little consequences for all that. So that's a major problem that needs to change too. So that's something that we really encourage our allies and people to use violation tracker for those efforts to look at. We also have a COVID stimulus watch, which is just another way that we looked at money that came in, that people were getting. These large corporations were still getting a lot of money through these grants and loan programs, and we put it against their corporate history. So you could see that a lot of the people that got contracts, for example, had extensive fraud against the federal government that gave them these contracts. So there's problems with the tax code, and there's also problems with consequences for companies that don't comply with the rules. And they're so weak right now that becomes a real issue for talking about changing the way that they operate.
Yeah, thanks, Arlene. And I think like one of the things that really gives me optimism about this is I really do think that people like this next generation of students, and people as consumers, and people as citizens and as activists are ready to say like they don't want to actually stand for this anymore. They don't want to just kind of let this happen anymore. And I think that the Union Drive in Bessemer is an example of that. And I think that the sort of climate activists, the activism that you see rising is an example of that. And I guess I want to just ask Stacy, like, because I sometimes think like we leave people thinking like the only way that you can do anything about this is if you yourself don't buy from Amazon, even when all of your local stores have gone away. And, like, why can't we just, and I think you actually did a TED talk, why we can't shop our way to a better economy, which I loved. But why doesn't consumer activism get us there? And like, what else can we actually do, Stacy?
Yeah, we do sort of reach for like the consumer response, like so often when confronted with the nefarious behavior of corporations, we think, oh, well, we should stop buying there, and that's sort of the first place we go. That's something that is, our consumer muscle, if you will, is like super weak, to actually make change that way. It's not really possible. You have to amass a huge number of consumers and, all sort of on the same page, doing the same thing. It's just not, there's no real way you can make change, even on something small and symptomatic. You certainly can't change like the basic underlying structures of power, of corporate power that way. And yet we reach for that as opposed to reaching for our citizen muscle, which is so much more powerful, and which corporations really fear us using. So I think, one thing to note about that mindset is it wasn't always that way, that this sort of notion of ourselves as citizens is a relatively recent, like within the last few decades, kind of notion. It started to grow in the 50s a little bit, and then took on even more significance from the 80s and onward. You know, before that, we tended to have a more expansive view of like who we are as like actors in the world, where we thought of ourselves not just as consumers of value, but producers of it, people who worked, who made things, who needed to earn a living, who wanted to start a business, who created something, who, was engaged as a member of a community, as a steward of a community, was a citizen of a country, and so on. And so we thought of ourselves in that multifaceted way. And from that vantage point, we tended to approach questions of corporate power very differently, because it wasn't sort of, the way that it's been, where we've collapsed everything to this notion of like, well, if it's cheap, it doesn't matter, where we don't even think, that's sort of the framework that we've been in for many years. The good news is I think that that's changing. I think people are very much, aware of that. And, from the standpoint of a company like Amazon in particular, the nature of monopolizing online commerce, of being the biggest cloud services provider. I mean, the infrastructure for a huge amount of the internet, and for many other companies. The nature of being the dominant voice interface, of having its tentacles in so many different areas, the nature of that kind of monopolization means that it's impossible to avoid Amazon. And we shouldn't imagine that it's on us as individuals on our own to like fix this problem. This is a political problem. It's a policy problem. Amazon is a creature of policy, and that's the thing that we really need to change if we want to have a different outcome in terms of how this company operates and how it's structured and who has power.
Yeah. Okay. Yeah. Thank you. Well, so I guess I have one more question from me that I want to ask Dania, and then I know there are like great questions coming in the chat, so I may try to flip to some of those. But I think, Dania, that as we sort of talk about how this all connects to taxes, one of the things that I think we see that like Good Jobs First research shows, and I think Stacy's research shows, is that all of this tax avoidance depletes the resources that we have to kind of invest collectively. And I know you've talked about the need for deep investments in government at all levels. Like, why do you think that matters? Why can't we just let corporations do the investment and let them, they can be innovative and they can be nimble? Why is that not enough?
Yeah, so if you follow me on Twitter, you know that I make this semi-regular joke about how Amazon's real invention is the 19th century. And they're like continually reinventing the 19th century, except kind of without all the good stuff that Stacy was just talking about the way we thought of and understood ourselves in different ways. And so I think there are at least two pieces of danger to just letting corporations just do what they would do without any intervention. The first is a number of things that are very important are not profitable. So like, we can have nice things like schools and clean air to breathe, clean water. So, healthcare for more people, especially in times of pandemic, climate mitigation, high quality transit. I could spend the rest of this hour talking about all the nice things we could have in a community if our public dollars were put towards public use. So that's one set of things. The second is, I guess I would say, it made the sort of news this week that Jeff Bezos personally said that he supports the new infrastructure plan, which like, we're not on a first name basis, Jeff Bezos and I, but like, thanks, Jeff. Glad to have your opinion. But since this is a democracy, imperfect, needing a lot of work, I think we're all in agreement around that. And that's one of the things that public dollars are for, public resources are for, is supporting people to participate in a democracy. But like, actually, he's still just one dude. And the way we make policy in the United States is a lot of people get together and send representatives to like advocate for their interests. And so to follow up on a lot of what Stacy was saying is there's neither an individual nor a consumer-based solution to the kinds of structural and systemic problems that Amazon presents. And we don't need Jeff's approval for coming up with those solutions and then implementing them. It is his job and Amazon's job to follow the law and to pay their full tax bill. And that's a question of power. And I think a really interesting thing, a really exciting thing about doing this work in the way that we do it at Athena is that we invite people to find one another across all of these lines of difference that I think we generally think in organizing as dividing us, right? Like you can really see it at play, certainly in Bessemer, but in all of the other communities, including ones where Athena members are organizing workers, where there's a real connection between the people who work inside the facilities and their friends and neighbors who also want them to have safe working conditions, not to have to pee in bottles, et cetera, but also that they want to breathe the clean air that they also want parks and et cetera, the things that public funds allow us to make available for everyone. And so at Athena, our effort is to help, owners of independent community businesses find ways to be in solidarity with people who work at Amazon, find ways to be in solidarity with people who live near Amazon and need the environmental racist air pollution, et cetera, to end and to be cleaned up, find ways to connect with people who are not only customers and not only workers and not only residents, but also people who pay taxes and have ideas for where those public dollars should go that generally don't include whatever vault like Scrooge McDuck is holding all those gold coins in.
Yeah. Great. All right. Well, I have a whole bunch more questions and I will probably get back to them, but I know one question that came in the chat from the audience that I kind of wanted to elevate and that I think actually all of you might want to take a swing at is just like, what can activists and organizations do to pressure Democrats to keep this front and center, tax equity kind of at the top of their agenda? A lot of Democrats have, of course, close relationships with corporations. That's kind of the way our campaign finance system works. And so they're not always necessarily supportive of creating true tax equity. Do any of you have some advice about how we keep up the pressure on Democrats and Republicans to kind of do the right thing? Would one of you want to dive in on that first? Arlene, I see you're nodding. If you want to jump in, go for it.
Oh, well, a couple of the examples that we've seen of people coming together to try to sort of stop this. There was a good example in Baton Rouge of some teachers that walked out because ExxonMobil was on the line to get another $6 million subsidy. And the teachers threatened to walk out and they ended up pulling the subsidy. We saw another case in Grand Island, New York, where an Amazon fulfillment center was coming and the community didn't want it, so they rallied together. So there are instances happening at the local level where they're sort of rising up and they're angry about these corporate giveaways and talking to Dania's point for a second about these disparities. A new accounting rule that lets us see how they impact schools is we find a lot of cases where school districts with high racial and ethnic populations are paying the brunt of these tax abatements. We see it in Kansas City, Missouri. We see it in South Carolina. We see it in New York. We see it all over the place, thanks to this accounting rule. And I'll put that study in the chat after I finish here. But in Kansas City, they're using the data. The superintendent is using the data to try to make change to local policy so that they can weigh in on whether these abatements were given or not. And so it doesn't directly answer your question, Amy, but there are other ways that people are organizing and coming together that can happen at the local and state level where a lot of these decisions are being made.
Yeah. Either of the rest of you want to jump in on this? Have anything to add? Otherwise, yeah, go ahead, Stacy.
Yeah, I think the one sort of hopeful trend I think that's been happening is it feels like, and I'm curious what all of you think about this, but it feels like we are less and less sort of focused on a series of issues and more talking about the bigger underlying structural problems, because all of these things, whether it's racial oppression or monopoly power or lack of public investment or decaying democracy, I mean, they're obviously all intertwined and are really part of one of the same problem. And so that to me feels like a shift from maybe 5-10 years ago and before, in the way that I felt like these issues were being more talked about, like, oh, there's tax policy and there's this and there's this and this. And that's really shifting. And I think you see it, you see it partly in Athena as this broad coalition that brings together, small business, labor, community organizations, civil rights groups, all around questions of power. So it's not so much, certainly it's about the symptoms and behavior of Amazon, but at root, it's about the fact that no company should have this kind of power and that's fundamentally anti-democratic. And to me, that feels like a very different framing and approach than maybe reformers used to have. That feels really, really hopeful. And I'm also, I mentioned it before, but I'm really glad to see there are more conversation and more integrated conversations with independent business owners, which used to be, really part of the New Deal coalition, labor and small business and farmers. And for various reasons that got kind of pulled apart and reorganized in the 70s and 80s. And it's nice to be at a moment where it feels like we're recovering that. We at the Institute helped found, just launched this week, a campaign and coalition of independent business owners and independent business groups, called Small Business Rising. And right now is very much focused on the opportunities around reforming antitrust. We're going to get bills in Congress to really invigorate our antitrust laws and maybe even break up some of these big companies. And so we're really focused on that right now. And this is a real, existential threat for a lot of independent businesses. So there are organizations around that table, from the National Grocers Association to the American Booksellers to the Hardware Store Group to lots of local business alliances. And I think that kind of configuration and kind of building connections with other elements of other kinds of folks who have a stake in from different points of view, is something that then can really build power around a whole lot of other issues, including corporate tax reform, because it really is galling if you're trying to keep a business going and being a contributing member of your community and being asked to compete against a company that doesn't have to pay the same taxes that you do.
Another place I think, Amy, we're seeing a lot of movement, to carry on my thread of racial justice, is the conversation about Amazon's role in policing, and not just, right, of course, I'm focused on Amazon, but not only Amazon, that there's a whole slew of private interests making a ton of money off the expansion of surveillance, and the ways in which those are significant infringements on our right to organize, our right to free speech, and in particular the incredible civic energy of last summer, when you can really feel the kind of thing that I think that Stacy and Arlene are both talking about people reaching towards one another, trying to keep one another safe, trying to figure out how to be in community together, that this is our shared project, and that there have to be ways in which we get to govern in service of that. And so that's another thing I would just point out as a place that I take continuing inspiration and hope.
Yeah. That's great. So I know a lot of the questions that are coming in from the panelists are particularly about corporate taxes, which is great. So maybe we will pull my colleague Matt Gardner back in just so that we're ready from some of that. And I know one thing, Stacy was talking about the fact that, small businesses and working people and citizens in communities, and people who want clean water often are very much on the same side, but it's not always portrayed that way. I think that there's been some very we keep using the word nefarious, but very problematic parts of the business community that have somehow successfully captured or implied that they speak for the business community. And I know, Matt, you've thought a little bit about some of this, because I don't think that's actually accurate. So like, you know, who's the Business Roundtable? Do they really speak for everyone in business? Maybe Matt can jump in on that. And then, you know, I'm sure others might have something to say about that too.
Yeah, sure. Thanks for that. So the Business Roundtable is a collection of the leaders, the CEOs of some of the biggest companies on our list, some of the biggest companies in America. They have been lobbying for lower taxes for a long time. In no small part, the vigor with which Congress sought to reduce the tax rate in 2017 was because the Business Roundtable and its members told them to. More recently, and it's kind of charming in a way that they're pretending, but more recently, the Business Roundtable has had a complete reimagination of its purpose. And in fact, in late 2019, they put out a revised statement on the purpose of a corporation, the idea of which was to show that they're moving away from this sort of myth that all corporations can maximize their profit, and that it would be violating the fiduciary duty they have to their shareholders to do anything other than maximize profit. And in this revised statement of principles, they make this whole long list of all the good things they're going to do. But it's a very Elon Musk sort of approach to doing things socially. Like, whatever is wrong, we're going to solve it by building a rocket and flying to the moon. And this statement of principles does not even once mention a couple of words that I think are fairly important, like tax or government. These words do not appear in their worldview, and I think that's pretty telling. More to the point, one of my colleagues at ITEP, Reggie Ruckers, figured out that 8 of the companies that are on the Business Roundtable are also on our list of 55 no-tax corporations. So pretty clearly, the Business Roundtable and its members still have a chronic blind spot for this question of government as a partner in their efforts to save the world through their newfound social activism. And they clearly have a blind spot for this, for the obvious fact that if these companies with the huge amount of profits they're reporting now don't pay taxes, we're just not going to be able to solve our infrastructure problems. So they're not, I'm pretty skeptical about this transformation they say they've had.
Yeah. Well, and so I do want to get back to taxes, but I guess, and Stacy might have something to say on that, but I guess this just feels like it begs for Stacy's main area of expertise, which is sort of consolidation. Because if there's anything that hurts small business, it's when big business gets bigger and bigger and bigger and uses that influence more and more and more to both manipulate what taxes they have to pay and manipulate what laws they have to follow, but also just to manipulate markets in ways that might seem appealing because it gets you a cheap price on something once, but in the long run maybe hurts us all. So I don't know. I don't want to anticipate your answer, but Stacy, can you jump in on that since you've done so much work in that area?
Yeah, I mean, I think one of the, if you want to have a democracy, one of the things that you have to do is have checks and balances that disperse power, and we're familiar with this in the context of government. We have the various branches of government. We have the relationship between national and local, that there's, a certain amount of local authority, but we have our civil rights are protected at the national level. There's all of this sort of checks and balances that we think about and how you structure government with the idea that you don't allow any one part of it to become so powerful that it's overweening and disrupts the idea of democracy. And, from the, as part of that, it's really crucial that we also check private power. And I think this is what we've lost sight of. I think that anti-monopoly policy is like a core part of how you form a democratic government. If you can't check private power, then you can't actually have a democracy. And, antitrust policy has been for 40 years now, not only just incredibly weakened and in effect, you could even say turned on its head. It has become pro-monopoly policy and how it's actually executed. but it has been treated as this like specialized area of law that only, you know, specialized economists and lawyers are allowed to even talk about, and is really divorced from the broader public conversation about what kind of society we want to live in and who makes decisions and how are those decisions made. But that's the essence of policy around monopoly. And so I'm really excited about the fact in the last few years that monopoly as a word is back in the conversation, not just about the board game, but as a concept, and that we are talking more and more broadly about notions of corporate power, of antitrust and anti-monopoly policy. And, you know, my distinction between those two things is that, you know, antitrust is, you know, a particular body of law around how markets are structured and how big companies are allowed to be and questions like that. Anti-monopoly is broader and includes all of the ways in which we shape the scale and nature of markets and business, and it certainly includes corporate tax policy as a tool of either monopolization or anti-monopoly. So yeah, it's been really great to see that come back into the conversation, and I'm, you know, would just note for people that, you know, we're going to have legislation in Congress, we're going to have bills in the coming weeks and months, and that's, I think, it's a really crucial moment to be paying attention to those issues, you know, particularly around the big tech companies, but also around sort of recovering to some degree and reinventing this body of law in ways that you know, really look to democratize economic power.
Can you just before I like shift away from that point, like can you just give us a little more on that? Like what do you anticipate in terms of possible legislation that could be helpful here?
Yeah, so
like to me, something, I'll just say one more thing, because to me, who's not an expert in this particular area, like it feels more intractable than fixing taxes, you know?
You know, yeah, I think we might get there. I think we're going to do it. I think we're going to break up Amazon. I think we're going to get there on antitrust reform. So the House, the Antitrust Subcommittee, which is part of the Judiciary, did a 15-month investigation of big tech, so Amazon, Apple, Facebook, and Google, and published I think it's almost 500-page report last October. It's an excellent report. It's actually very readable. We have a summary on our website if you don't want to read the whole 500 pages, but it's very, you know, it's a really good read. It's very well put together. That report included, the conclusion of the committee was that these companies have monopoly power. They exercise it in ways that harms working people, communities, small businesses, and ultimately democracy. And then there's a set of recommendations for what Congress needs to do about it. And those recommendations include breaking up big tech companies along business lines. So you separate them out into multiple companies based on particular parts of their business. It includes having some rules around how those platforms, those online platforms, are allowed to operate, so that they're sort of governed a little bit more in the public interest, regulated in the public interest. And then there are other recommendations around putting the teeth back into antitrust laws and overturning some of the bad court cases that have really undermined antitrust and sort of collapsed antitrust into this narrow conversation about narrow economic efficiencies and not about questions of power and who has it, which is what it used to be the basis of how these decisions around mergers or around monopoly behavior used to be viewed, was much more around power, structure, scale, and then it just got completely decimated beginning in the 1980s. So there's proposals around changing that, having Congress step in and reiterate what the purpose of these laws are, that they have a core purpose around democracy, around issues of power. So David Cicilline, who chairs that subcommittee, has said that there will be bills in the coming months to carry out every single one of those recommendations. At the same time, we have Senator Klobuchar, who leads the Antitrust Committee in the Senate, out with a bill, coming out with a book in a few weeks about antitrust, clearly wanting to lead, calling for reform. And interestingly, we do have some Republican voices on this. We'll see sort of how that plays out, but there are ways in which, and we see this in the polling, certainly, that, majority of Americans on, both Republicans and Democrats believe that the big tech companies have too much power and that we need to address it through policy change. So I think there is a way in which this issue potentially can defy, some of the roadblocks that other important issues have faced.
Great. Okay, thank you so much. So there are a ton of great questions in the chat, and I want to take one of them and maybe throw it to Arlene and maybe also Dania, which is like, just why do local governments why do they agree to abatements for Amazon or anyone else when it depletes their local tax base? Maybe Arlene can, yeah.
Yeah, so there's, a lot of times it comes down to the economic development officials or even the companies themselves are the ones that are presenting the case for why these subsidies are so great, and there's no evidence, there's no real cost benefit analysis. And I think economists on the left, on the right, libertarians, there's sort of this general consensus that these subsidies don't actually generate economic development and don't pay for themselves. But what officials at the local level hear is that these are really going to create a lot of great jobs. It's going to bring all this activity. It's going to be a trickle-down effect into the community. And even though that's just what they're hearing, that's just what they know. A lot of these decision makers at the local level who can give away millions and millions of dollars, if not more, they are, a lot of times they're paid, a few $100s a month to serve. And so their expertise may not be in economic development, and all they do is hear from the companies. So, and the companies themselves are pretty aggressive. I think the Wall Street Journal showed that Amazon's plan was to get $1 billion in subsidies per year from local governments, and that they're very aggressive in doing that. They make them sign non-disclosure agreements. They threaten to go to the community next door. And so they're using these real hardball tactics, and these local elected officials who really want to do right to their communities, they want to bring jobs, will sign these non-disclosure agreements, and then the public will hear about it after. It's a real bad transparency, open government problem. And so I think it's just what it is. They're acting a lot of times, I think, in the right interests, these local officials, but they're really facing a really well-funded, powerful political machine and corporate machine that makes the case that these abatements are good when they just cost the communities.
Yeah, I mean, I think if we think back, thanks to fabulous ITAP, right? Like, there's a huge body of information about how long big corporations and wealthy individuals have been starving public coffers for public purposes. And that money comes from somewhere. That money comes from us. And so a community that's struggling with maintaining a tax base, having enough dignified and fair work, keeping open their post office and their, fundamental basics of the community, they have big needs. And so when a corporation, especially something that has the kind of glamour and kind of capture of our idea of the future that Amazon does when they come in and they wine and dine people. And I think I would say we see this in the community of public officials. WBEZ did this amazing expose, right, about how Amazon got $100 million from white communities and $513 million from Black communities to grow, when clearly they're worth $1 trillion and don't need money from either of those communities, right? So there's that. And I think we see that similarly on the enforcement side, especially given the last few weeks of conversation about what it's like actually to work for Amazon. That, the Department of Labor needs humans to check what's happening inside these facilities, and as do the state OSHAs, et cetera. And we don't have humans in those roles, and because Reaganomics means we've been starving government since basically the time I was born, and this gray hair is real. And so we're in a situation in which we're all pitted against one another, and Amazon and corporations like it can take advantage of that desperation. And that's part of the kind of power constellation of power that all of us, I think, are talking about. And so basically that's how.
Yeah, no, that's great. And that actually works in a lot of ways as I think some closing thoughts from Dania, because I think it really captures a lot of what your organization is working on and really does so very beautifully. I guess I want to give us each a minute here, and that's about all we have, to make any closing statements that you have about this and how it all relates to each other. And maybe if Arlene's comfortable going first, I'll maybe want to save Matt for last, if that's okay.
Yeah, I'll just say, you know, when I was a journalist, I was really invested in covering local governments and how they spent money, because, you know, and this is what I would always preach in my newsroom, was that when money is being drained poorly or used on subsidies or corporate giveaways or whatever the case may be, it's money that isn't going back into the communities. And when programs and services are cut, the first things that tend to go are programs for underrepresented communities, low-income communities. And so it's a real social justice issue, as I've always looked at it. And you know, I'm happy to hear, it's good to hear Stacy talking about these systemic problems, you know, and really that it's such a big undertaking to do, but it's possible. I think there's a lot of momentum right now. And I'm glad to be part of this discussion. I hope we could.
This has been great. Thank you so much. And I will just say, I actually really do feel quite optimistic now. And a lot of it is owed to the incredible work of the people around this table right now. So thank you so much. It's really been a joy to be in conversation with you and in solidarity with you as we move forward. And I dropped in the chat just a link to our program at ILSR for anyone who wants to read more about some of the research and work that we're doing. Thanks.
Thanks. So Matt, anything you want to say as we kind of close this out?
Well, first, that it's been incredibly empowering to hear the voices on this panel. The work you guys are doing is really so vital to raising awareness of what companies like Amazon are doing to undermine our social fabric and our economy. In terms of like positive things, as I said before, I think what this administration is talking about right now in terms of domestic and international tax reform is such a sea-level change from the negative, should we cut taxes or should we not cut taxes frame that we've seen for years. I think there are lots of reasons to be optimistic about the path forward for the years to come. So leave it there.
Yeah. Well, thank you all so much. Look, it's been really fun talking to you all, and I think, look, we can fix this. I think we have to fix it, and I think like the communities that you all represent are demanding that we fix it. And I think that for the first time, we maybe have the right. Matt pointed this out to me, but maybe some of the right people in charge of some of the committees in Congress, and some will from the president, and then a lot of pressure from unions, from students, from citizens, from activists. So I hope that we will get there, and I'm really grateful to all of you for being part of this conversation. So thank you so much.